February 2021, it means it started on March 2020, right? If anybody's struggling with calculating their academic year and determining dates, please tell me, and then we will have a discussion regarding this often. So we are just gonna go to our pre-adjusted trial balance. So when it comes to the pre-adjusted trial balance, when we do the income statement, we focus on nominal accounts, right? So the nominal accounts are here. We have sales, we have cost of sales, and they're both unknown. So we have to calculate them. And then we have director's fee, audit fees, advertising, and all other expenses and incomes down below. So we are gonna go on to the adjustments, right? Additional information. A says the markup achieved is 160% on cost. The correct gross profit is 14,881,600, right? So what this means is, and I'm gonna go on to the memorandum that we're gonna fill in. Great. I see everybody can still hear me. Share. Okay, guys, so I'm gonna share the memo that we're going to be filling in. Yeah, and then going to document and share. So they're telling us the gross profit is 14,881 and it's 160%. Can you see my screen? Please tell me if you can see my screen. Moiketsi, please unmute yourself and tell me if you can see the screen.
Hey, Carbon.
Great. Okay, so they're saying markup is 160%, ne? On cost. So what does this mean about cost? It means cost is 100%, right? Cost is 100%. What does this mean about sales? How much is sales? Please unmute yourself and tell me what you think sales is. Dana, what is the formula for finding sales? Sales is always cost plus gross profit. So how much is sales? 260%. Does everybody understand? It's 260% because sales is always cost plus gross profit. So when I was doing this memorandum, what really also surprised me, the sales amount was 260%. Usually the sales amount is always 160, and then cost of sales is 60, and then cost profit is 160. So I want you guys to be aware that sometimes gross profit is above 100. Do you understand me? Sometimes they charge you profit of more than 100%. And that means then the cost of sales is going to be 100, and then the gross profit is going to be the cost of sales plus gross profit. And in this case, it's 100 plus 160, which is 260. If you need any more explanation, raise your hand, your virtual hand, and then I will tell you to unmute yourself or just give me a message in the chat box. Right, so the gross profit is given as 14,881. So how do we find cost of sales? Cost of sales is then 14,881. I hope everybody has a calculator, Shem, in my class. 600, and then we multiply by how much? It's always the unknown over the known. In this case, what is unknown? Cost of sales is unknown, sales is unknown, gross profit is known, right? So it's going to be 100 over So sorry about that, over 160. Does everybody understand? And then here we are going to have 14,881,600 multiplied by, what is the unknown? 260 over known, which is 160. Should I explain again? Please give me a message, thumbs up if you understand, and thumbs down if you want me to explain again. Thumbs up. I got one thumbs up from Mweketi. Babalo, are you fine? Or should I re-explain quickly? Thumbs up. Great. So what's important here is the fact that what I want you guys to take from this class, gross profit is not always less than 100, first of all. And then secondly, when it comes to calculating sales, cost of sales and gross profit, the ones that are unknown, the formula will always be having, and let me highlight that, we are always going to have something like this. It's always going to be the unknown one over the known one. That's the formula. So I want you guys to have your calculators with you, please. But for this calculation, I will do from my own calculations. 102,600. And then our cost of sales, remember cost of sales is always in brackets, always and always. And we have 9,301,000. Are we fine? So we are gonna go on to other operating income. Great. Is everybody still okay? Okay, let's go on to the question paper quickly. Just opening the question paper again. Great. Let me see if you guys can still hear me. Okay. So, and then B says packing materials used for the financial year was 39,700. Obviously, packing materials is an expense, and we don't need to calculate here because they're already telling us what the packing materials used during the financial year was 39,700, right? So usually how this question goes, they give us the remaining ones, and they tell us the packing materials remaining is this much, and then you have to look at your nominal accounts and find packing materials, and then you say this minus the remaining ones. But in this case, we do not have to calculate because they've already told us how much was used, right? So we are just gonna go on onto our memo, and we are gonna record packing materials. It's the document. Packing materials goes under other operating expenses, right? So let's have our other operating expenses somewhere here. Operating expenses, operating expenses. Great. So our first operating expense is packing materials. The first ones are easy. I love this. Packing materials, and then we have 39,700, right? And then let's go back quickly into the question paper and see what's number 2. Did I stop sharing? All right, and then I'm going to share my screen again to go on to paper. Cool, and we're going to look at C. So C says received and recorded 9,750 from the insolvent estate of a debtor, which paid out 65 cents in the rent. The remaining amount must be written off. right? So please, guys, be active in the chat box. Can you guys still hear me? Yeah. Hello? Okay, great. I see you guys can still hear me. So please tell me in the chat box quickly, when we receive and we record money from an insolvent estate, what kind of income is that? What this means, what this transaction means, there was someone who owed us, right? Kaba insolvent. What does it mean when someone is insolvent? It means they are not able to pay off their debts. And what happens when someone is insolvent? We have to cancel out their debt as bad debts. So what happened, there was this person who owed us, they were insolvent by law, and then we canceled their debt as bad debt. But now we are able to recover some money. So it's bad debts recovered and it's income, right? Does everybody get that one? Thumbs up. Let me see. Thumbs up, great. So that is bad debts recovered. So let's go on to the memo quickly and have that on the memo. Am I sharing any screen? All right, so sorry about that. Screen memo, great. So we have income and it's called bad debts recovered. Please don't get your accounts wrong. This is called bad debts recovered, great. And how much is it? Let's go on to the question paper quickly. It was I'm so sorry, guys. Let's go into the question paper quickly. I'm so sorry, I didn't realize I was muted again. I didn't realize I was muted again. So I'm just gonna share screen again quickly. I am so sorry about that. So sorry about that. Let me share screen quickly. Okay, I'm sure you can hear me now. Please confirm if you can hear me again now. Thank you for popping in WhatsApp text. Yes, you guys can hear me now. Please give me a great, make it. Thank you. So they're saying we received and we recorded I don't know you guys. Okay, but we received and we recorded 9,750 from an insolvent estate. I had explained when someone is insolvent, it means they cannot pay off their debts. So what happened, this person was cancelled out as bad debts, but now we have recovered that money. So there's income, and that income is called bad debts recovered. However, we don't have to record it. Why? Because it has been recorded. We received it and we recorded it, right? And who to the insolvent estate paid out 65 cents. So how many cents are remaining? In 1 rand, how many cents do we have? We have 100 cents, right? Does everybody agree? In 1 rand, we have 100 cents. So it means in this case, 35 cents was not received, right? Do we agree? Let me see in the chat box. Thumbs up if you agree. There was a thumbs up from Pavallo and now it's gone. Make it a thumbs up, Pavallo. Thumbs up. So please don't make a mistake where in 1 rand we have 50 cents. We have 250 cents. So it makes 100 cents, right? So how do we record this in the memo? Just gonna go to the memo quickly. Great. So we have an income and it's called bad debts. I'm just gonna make sure you guys can still hear me because I don't wanna lose you again. Great, you guys can still hear me. So we have an income and it's bad debts recovered, but it has already been recorded, so we don't need to record anything. We are gonna go on to our expenses and we are gonna record bad debts, right? And bad debt on the pre-adjusted trial balance, we had, let me see how much we had. We had 28,800. So we are just gonna continue and add, and add 9,750 multiplied by, remember we say multiplied by unknown over known. We do not know and we do not have the 35 cents, but we have the 65 cents. How much is that? Does anybody have their calculator, or was my class attended before the calculator? But the amount here is then, so that we can hurry quickly, 34,050. Are we fine? Is everybody fine? Great. Should we continue to the next question? Okay, let's do that quickly. We're going to go back to the question paper again to do the Can you guys see the question paper? No. Great, here's the question paper. No, this is not the question paper. Here is the question paper. Babara adjust provision for bad debts to 9,350. Guys, please listen carefully on this one. I hope you can still hear me. If you can't, please pop a WhatsApp or text in the chat box. So Bara adjust provision for bad debts to 9,350. This is what you guys usually get wrong. So let's look at provision for bad debts. Does anybody know what provision for bad debts is? Do we know what provision for bad debts is? Provision for bad debts is when we do budgeting and then we estimate the people who are not going to pay us are going to be this much. So we had estimated we were not going to receive from debtors an amount of 9,800. Can you see the 9,800? I'm going to highlight it quickly. Let's see. So we had estimated we were not going to receive 9,800. but we actually did not receive 9,350, right? So we overestimated 9,800, but tjhelete re sa e patalwang ke 9,350. So we have to adjust it. What's the difference between 9,800 and 9,350? The difference is 450. So what I want you guys to take away from this class that I think is very, very important, every time when bad debts goes down, when they say you have to adjust it and it goes down, it's income. But if it goes up, it's an expense. For example, let's say provision for bad debts now was 9,350, right? But the actual one is 9,800. So we thought it's going to be 9,350, but it's 9,800. It means it went up. So it's going to be an expense. But in this case, from 9,800 to 9,350, so it's income. Do we understand? Because I want to highlight this one very much. So, Moiketi, do you understand? I want to see a thumbs up if you understand. Paolo, should I re-explain? Right. So every time provision for bad debts, high fokotse, it's income, right? Mara high eketseya, it's expense. Great. So in our case here, it went down from 9,800 to 9,350, right? So it's going to be income. Sure. Let me share screen again quick to record in the memorandum. So we have income again, and it's provision for bad debts. Provision for bad debts. And remember, your calculations should always be here, and they should always be in brackets because they are marked. Please, guys, even at Marking Center, they're going to mark them. So 9,800 minus 9,350 in brackets, which is 450, right? And then we move to the next one because now we are moving quickly. So we're going to go again to the question paper. Share. Great. And then the next one for E says one of the employees was on sick leave, right? And was omitted. Omitted means they were left out, right? They were omitted from the salaries journal. So the accountant forgot to pay them because they were on sick leave, right? So her details are as follows. The gross salary is unknown. And then we have net salary, we have deductions, baraki 30% of gross income, and then we have employer's contribution. An important detail that they give us here is that employer's contributions are debited to the sales and wages account, right? So it means this part is also the 4,500 is also included in the sales, in the salaries and wages account, apologies. So how much is the gross salary? What's important to remember is that gross net salary, so this one, I'm going to highlight it. This one, it's gross salary minus deductions, right? So gross salary is the amount that you get, and then mobility deduction, bo pay as you earn, bo medical aid, bo the tax, and all of those. So gross salary is how much you earn before deductions, and then net salary is how much you earn after deductions. But in the income statement, right, the amount that we enter is the gross salary, right? Because it's the amount that that went out of our bank account as a result of an expense, right? So how are we going to calculate this one? It means then gross salaries, this one is 100%. Okay. deductions is 30%. It means net salary is how much? 70%. Do we agree? Let's do it on the memorandum for understanding. Sure. So it means, and I guess salaries and wages are an operating expense. So it's gonna go down here. Salaries and wages. So we had on the pre-adjusted trial balance, we had 6 million. This is the amount that was on the pre-adjusted trial balance. We have 6,425,000. So we are gonna add, right? We are gonna add, let's do this calculation in brackets. How much did we have? We had 23, the amount that was known, it was 23,800, and we were told that this amount is the net salary, right? So we are going to multiply it by 100% all over 70%, because we say the unknown one, which is gross salary, which is 100% over the known one. How much do we get? If you have a calculator, calculate it quickly, but you're gonna get 34,000. And then we add the employer's contributions, because they're telling us it's added as part of salaries and wages. So we add 4,500, and then we get an amount of 6,463,500. I think this one was a fairly easy one, so I'm sure everybody understands. Does everybody understand? Thumbs up. Great. Okay, let's move quickly. So, and then we go to stock valuation. The reason why I'm skipping F is because I'm not going to confuse you with topic year term 2, right? Remember I said we are not doing on this question paper 2.1 because the weighted average method, FIFO method, it's a term 2, I believe, topic that we're going to do when you guys start doing it at school. So we are going to skip this information. It's related to that topic, okay? So we are going to skip it, and then we're going to go to G. G, Mweketi, you should be doing G for us, because last year you were a master of doing this calculation after we had it in class. So the premises have been rented for the past 5 years. So immediately when they say like we have been renting out to people and we have been receiving income, it means it's rent income instead of rent expenses. Instead of rent expense, I'm sorry. So the rent for March 2021 has been received. The rent for when? For March 2021, let's highlight that with pink. And then let's go up just for a quick reminder, Yahore. Our year ends when? Our year ends 28 February 2021. So it means this is income received in advance. Do we agree? But let's say the next month, which could never be me, because my rent is always either late or in time. So I've never paid rent in advance. Hopefully I have so much money in the future that I pay rent in advance. But what happened here is that one of the tenants paid for the following month in advance, right? Due to the lockdown, the rent was decreased by 25% per month for only 3 months. From when? From April to June 2020. Moeketsi, do you want to do this one for us? Please make me proud. Because when I learned last year, Don't laugh, because when I lived Bali last year, you were masters of this calculation. So please don't disappoint me. Do you want to do it for us, or should I continue? Please give me a thumbs up if you want me to continue and do it. But if you say that, I'm not a proud mother today, Chef. But I'm going to explain this slowly, so please listen. Sharp. It means rent was paid for how many months? Please give me that one at least. I'm going to go in the chat box. Rent was paid in advance for how many months? Let's have the chat box buzzing. How many months may you get? You don't have to unmute yourself. You can just have it in the chat box. 13 months, right? Instead of 12 months. A financial period is 12 months, but we received rent for 13 months, 1 month in advance. And due to the lockdown, the rent was decreased by 75%. So it means for 3 months, 75% of the rent amount. Do we agree on that? 75% of the rent amount instead of 100% was paid for 3 months. I'm gonna go to the to Microsoft quickly so that I can do the calculation practically for you guys. Let's see. Let me stop sharing and then we share again. This one is very important, guys. And then now I want to question paper. I want you guys to show them where they try to set difficult question papers, but you guys know your stuff. So let's try and do this calculation, right? So for 3 months rent, let's start here. Enter. Let's start here. Rent was received for 13 months, right? And the rent amount on the pre-adjusted trial balance, it is, let me see, it's 208, 250. So it's 208. Let me have 208,000. 250. Great. And it was paid for 13 months. So, and then back for 3 months, it decreased by 25%. So they were paying 100% of the rent amount that we don't know, right? And then landlord decrease rent for 25%. Saba, well, I'd be such a happy girl if my landlord does this. So it means they paid 75%. So sorry about that. They paid 75%. We agree on that one. And then they paid this 75%. Please, guys, on my laptop, when we have classical laptop, the X is my multiply, okay? The X is the multiply. So it means for 3 months, they paid 75%. So how much is 75 multiplied by 3? And I want you to also do this calculation on your own, okay? So when I'm doing it, also do it for your understanding. 75 multiplied by 3 is 225, right? You got the same amount, hopefully. And then, so it means for 10 months, because remember, rent was paid for 13 months. Please tell me, can you see my screen, Handle? Or should I go up a bit? Okay, I went up a bit. So it means for 10 months, because they paid rent for 13 months. Right, let's highlight the numbers. Hello. Okay, it's fine. And then for 3 months, they paid 75% of the rent amount because rent was decreased, right? So it means for 10 months then, for 10 months, they paid how much? 100% of the rent amount. So 10 multiplied by 100, which is then 1,000. So in total, they paid 1,000 plus 225, which is how much? 1,225. Do we agree on that one? Are you still following me? Sure. And then the amount ya rent is 208,500. So we are going to multiply it by 100 all over 1,225,000. Hi, Bo, I'm so sorry, guys. Over 1,225, which is then 17,000. Please tell me if you understand. Thumbs up if you want me to explain again. Thumbs down if you understand. Hey, whoa, guys. Please discuss like a conti. Moiketi, do you understand? Like the revision, does it help? Okay, Moiketi says, where I understand. Do you now remember how we did it last year? Please unmute yourself and tell us. Oh, I hope. So, Pablo, should I re-explain to you because we are doing it for the first time? So, Pablo, should I re-explain? Please give me a thumbs up if you want me to. Okay, I see you have unmuted yourself. So tell me if you want us to re-explain.
I understand it.
You do?
Yes.
Okay, great. But I am gonna re-explain it anyways because then now I know this is difficult and I took some time for me when I was in matric, guys. In fact, when I was in grade 11 to really understand. So we're gonna try to re-explain. So, right, we received an amount of 208,250 for rent, right? But we are being told, hore, 1 month was paid in advance. Oh, this rate is irritating me, guys. I don't know if I don't like rate because it's almost Valentine. So for me to love rate, you guys have to buy me a Valentine's gift. But yeah, so yeah, but let me remove the rate. It's irritating me. The rate is irritating. Hi, Bo. Rate. It's fine. So we received an amount of 208,250 for rent, but it was received for 13 months. So we have to minus 1 month because we are calculating for the current financial year, which is 12 months instead of 13 months, right? But we learn on the transaction, hore, for 3 months, rente hona le mohlang ileng ya fokotseha. You know, I don't know, this is a nice landlord. Hona le mohlang ileng ya fokotsa rente fela ka 25%. Like I want to go and stay there. But yeah, the rent amount was decreased by 25%. So it means they paid 75% for 3 months, which is 225%. And then for 10 months, they paid 100%. For the entire 10 months, it gives us 1,000%. Right? So with this calculation right here, no. So this 1,000% plus the 225%, in total, it gives us 1,225%, right? So we want to find out, what is the full amount ya rent? When you pay rent 100%, what's the full amount? So we say the amount multiplied by 100% over the total percentages for the year, which is 1,225, right? And it gives us 17,000, which means for 10 months, 17,000. So for 3 months, let's calculate for that, even though it's not required. Unapatala 75%, right? So unapatala 75 all over 100, which means unapatala how much? Do you guys might have your calculators in class? I doubt. It means unapatala, no, not me saying divide instead of multiply. Unapatala 12,750. 750. We are taking 17,000 instead of 12,250. Why? Why are we taking the 17,000 instead of the 12,750? What's the reason? What's the reason? Let's go back to I see there's a message in the chat box. Let me check the message first before we proceed. Oh, it's the 13 months message. So we are going to determine why Renka 17,000. Why are we taking 17,000 instead of the 12,750? The reason for this is I'm trying to share the question paper. Yes, great. The reason for this is because April to June 2020. So it means come March 2021, in its normal 100%, right? So that's why we are taking the 100% instead of the 75%, because rente in fela for April, May, and June, right? So when it's locked down and whatever landlord normal, and then it went back to normal. Okay, is everybody fine? Is everybody still having a great class? All right, let's move. Let's move to the memo and see. Thank you for the thumbs up. Let's go quickly to record this transaction in the memorandum that we're doing, right? So it's gonna be rent income because it's income, it's not an expense. So rent income, and do we minus this amount or do we add it? Does anybody want to guess that one? 208, 250, the 17,000, add or minus? Let's see in the chat box. Everybody a wild guess. I want to see messages in the chat box, please. Okay, this means I still have to explain the concept of income received in advance, accrued expenses, accrued income, deferred expenses. So those four ones, if anybody revision from last year, in our next class, you want me to start by revision here, definition in total, please give me a hand, a thumbs up. If you want notes, you want me to prepare notes or to explain in our next class, and I will make notes. So Mweket is saying he's gonna need revision. Babalo, are you fine with them? You too. Okay. Okay, it's not a problem. On our next class, I'm gonna re-explain. But for now, since we don't really have much time, here rent was paid for 13 months. So it means we received income in advance. So we are gonna add it on next month, the next financial year's rent. So in this financial year, we have to minus the 17,000. Why? It's not for this current year, it's for the next financial year, right? I'm sure the people on Facebook who are doing math and other subjects are like, hey, Bo, how does the year end in February? But for us in accounting, we know we don't have normal years. Your year is whatever your year is. So for this company, the year ends on the 31st of February 2021. So March is next year. So we minus it for that reason. So we have 191, 250, right? Yes, and for the crowd on Facebook, yes, we are not crazy. That's how our years go by as accountants. Okay, let's move to the next one quickly. so that the class can end really. Let me share the question paper again. Accounting, paper 1, share. Great. We are done with that one. We leave it with a question mark. For which reason? Because we still need, guys, we are going to do more question papers with this kind of question until you guys understand it. So on our next class, we are going to do income statement, the part, yeah, this question only, and then we are going to re-explain the concept of accrued income, accrued expenses, prepaid expenses, income received in advance, and all of those. So on the next class, that's what we're going to be doing, but we leave it out for now. Hopefully you understand at least a little bit. I know it needs time. And then H, we have a loan, right? Class is ending at 12:30, okay? If we still have anything that we need to do, but we're almost done, we'll do it on the next class. And then we have a loan. Bare fixed monthly repayments of 59,200 have been made and recorded for the financial year ended 28 February 2021. The loan statement reflects a balance of 1,652,000, and then Bare provide for interest on loan capitalized, right? Moeketsi, do we still remember the difference between capitalized and not capitalized? Because last year I was making noise in these streets explaining capitalized and not capitalized. Let me see by a show of thumbs again, how many people know the difference and can explain now what the difference is between capitalized and not capitalized. By a show of thumbs, how many people can explain difference between capitalized and not? These are mainly into Njani, guys. Hallelujah, because we get the two ones, Chave. Okay, let's explain quickly the difference between capitalized and not capitalized, and we're going to try to explain it also as slowly as possible. Okay, let's explain quickly, right? We are going to do the same explanation we did last year. So let's say now you go to, where do you guys borrow money? You don't borrow money, but let's say Capitec. You go to Capitec and you borrow 10,000, right? And they say interest is, okay, let's do this. Here is Capitec. Harry Mole Capitec. Capitec Bank. Nango Capitec Bank, and then space. We want to have FNB here. FNB, and then you go to FNB, and then lete ngolo batla loan ya 10,000, right? And then Capitec tells you our interest is 10% capitalized. And after this class, I want you guys to advise people as their accountants when they borrow money, because now you know how loans work. Our interest is 10% capitalized. And then at FNB, they say interest is 10% and it is not capitalized, right? Enter. Where are you taking your loan? I want, okay, I'm assigning you guys. We get unka loan Capitec. No, I don't want to see suggestion. I'm sorry, we get unga loan and then Baba lo unka loan FNB na here. FNB. So we're gonna try to see which one is gonna pay more rent. When interest is capitalized, right? And when interest is capitalized, and let's say loan for 12 months. Yeah, let's say that for argument's sake. renka for 12 months. After 12 months, it will be and then Babi also takes the loan for 12 months, right? 12 months. Great. Cool. Enter. Oh no. Why does it do that? Oh, I was supposed to write Babi here. Babi. Great. So this means when the interest is capitalized for the entire 12 months period, and this is where the real explaining is, guys, please pay attention. So when interest is capitalized, it means for the rest of the 12 months, moeketsi a kolota Capitec, o tlo patala interest on how much? 10,000. Sorry about that. On 10,000 multiplied by 10% first, multiply by 10%, and then multiplied by 1 month over 12 months for the rest of the 12 months. It means 10% of that. How much is 12%, guys? 10% multiplied by 0.10. It's 10,000. It's 1,000. So it means we get to patala 1,000 yen and multiply 1 over 12 per month, which is how much? I think 83 rand for the rest of the 12 years. So Kaslimo, it means, let's say Kaslimo, it means to patala 1,000. 1,000. But what's gonna happen when interest is not capitalized, right? Let's say this interest payment, I think, let's write the payment here. Yeah, payment that to every month because it's for 12 months. Or patala 1,000, right? Every monthly loan in and now patala 1,000. It means by before January auto patala 10,000. Man, 10,000 multiplied by 10%. Hey, well, multiply one is 8. Yeah, auto patala this 10% for the first year, for the first month, and then you remember how much? Patala 1,000. 1,000 for the first month, right? And then ababa patala loan ya bona 1,000, right? In fact, yeah, it's fine. For the following month, ababa patala 1,000. It means how much? 9,000. Because we patete 1,000 ya bona iba batlang, so 9,000. It means since interest is not capitalized, Otlo patala interest on the amount that she owes. So Otlo patala 10% of sorry, Otlo patala 10% of 9,000, which is how much? Which is I think 900. 900. And then ababa patala 1,000, abasaba kolta 8,000. Otlo patala 10% on the 8,000. It means interest interfat, but when interest is capitalized, loss of a 1,000, you are still gonna pay them interest on the original amount a week at Mile. Do we understand that? Do you understand? Now, do you remember, Moikit? Please unmute yourself and tell us if you remember now.
I hope.
Okay, great. Do you understand, Pablo? Please unmute yourself and tell me if you understand.
I understand.
You understand? Are you sure? Okay,
Yes.
so in summary, without writing, let me stop sharing. In summary, right? When interest is capitalized and let's say you take a student loan next year, 100,000 and say the interest is capitalized. It's a scam because 1,000 because you are forever going to pay them interest on the original amount. But when they say interest is not capitalized, it means you pay interest on the remaining balance of the loan, which means skoloto sa se fela interest in their fads. But when it's capitalized, you are forever going to pay the same amount of interest. So please tell me in the chat box quickly, guys, between capitalized and not capitalized. So between FNB and Capitec, capitalized and not capitalized, which loan? Please write in the chat box quickly. Remember, when you write in the chat box, you go to more and then chat box. Let's see. Are you taking a capitalized loan where you are forever going to pay interest on the original loan amount? Or are you taking a not capitalized loan? Interest there, which one is better? Not capitalized. Same. You see. So tell me, when you write your accounting question paper now in March, and about capitalized and not capitalized, now do you know whether there's a difference between these concepts, and the calculations are not going to be the same, right? And no one is going to trick you with their question paper, by capitalized and not capitalized, and you're like, oh my gosh, it's very important information, right? And it determines your calculation. So let's see how we're going to do the calculation in this case. Every time you see capitalized, you should remember, oh, it means loss of a color that 200, like loan ya hawe take a 200. Maro bana ba kadime 100,000. You are still gonna pay interest on the original amount of the loan. Okay. Great. So what is this? We paid 59,200 monthly for 12 months, right? Let me highlight monthly because it's very important. So it means the 59,212. How much is that? I'm just gonna calculate it quickly. I hope you're also calculating. Multiply by 12. So repayments have been made and recorded. So we paid 59,200 multiplied by 12. The loan statement reflects a balance of, want to see where I did the calculation. Great. The bank statement reflects an amount of 1,652,000. Sure. Let's look at the pre-adjusted trial balance regarding the loan. So here is the loan amount we had at the beginning of the year. At the beginning of the year, nerekolota di loan tsa rona from Wonderland 2,150,000. And then now we owe 1,439,600. And let's highlight that one with green as well. So I want you to note this amount. If you have a book near you, just note this amount. The opening balance of 2,150,000. And then we're going to proceed to the calculation. So 59,200 multiplied by 12 gives us 710,400. So it means 710,400. Why are we multiplying by 12 again? Because the 59,200 was monthly repayments, right? Monthly, which is 12 multiplied by the amount. And then the loan statement reflects a balance of this much. So it means before repatala this amount, how much did we owe them? We owed them the 710,400 plus 1,652,000. So it means for this specific loan, Nereba kolota 2,362,400, right? And then we minus 2,150,000, we get 212,400. Remember the monthly repayments. Actually, let's do this. What I want to explain, oh my gosh, not the question paper going down. This loan amount, it does not include interest. Do you understand me? That is why this amount, the closing amount, because the closing amount includes interest. These two amounts, they do not include interest. So these are just the funds that we owe them, excluding interest. Do you understand? But the information we have here, this one, it includes interest, right? So that's the amount that we are trying to discover. We're trying to discover how much we paid in interest. So hence we are saying this amount, this one, and we multiply it by 12, and then we add this one, and then we minus Horenang. According to the bank, how much of the capital amount do we owe? And they're saying we owe 1,439,600. That's the loan amount. So the difference is the interest amount. I'm not sure if you guys understand. Regarding capitalized and not capitalized, I think we'll have it again on our next class. I will re-explain it again. But what's important to note now, this balances, this one's, it will always be the loan excluding interest, because interest is an expense, right? So it's not a balance sheet account, it's an expense, so it will always be under nominal accounts section. So any amount that you are given here and here, it never includes interest. Interest is a nominal account. And another important thing is to know the difference between capitalized and not capitalized. When it comes to calculations, even if you don't understand me properly, don't worry. On our next class, we will keep doing examples until you understand, okay? And then we move, because now we don't even have time to fill it in. So I'm just gonna send you guys the memo, and then you will ask me questions from then. Go to an old vehicle on I. So we are here now, and this is the last one, I think. And then we'll wrap up the class. Hoti, an old vehicle was sold for 88,400 cash in 31 December 2020, and this was correctly recorded. So, 1 March, right? Start like 1 March. So we have March, April, May, June, July, August, September, October, November, December. So it means Koloyo in a duty for 10 months up until 31 December 2020. So the car was in the business for 10 months. Hutu details of the delivery vehicle sold. This is the cost price, and then this is the accumulated depreciation on date of sale. So however, on date of sale, it means that the depreciation for the current year has already been added here. Do you understand what I'm saying? So let's calculate the carrying value of the vehicle. Remember, carrying value is cost minus accumulated depreciation. So it's going to be 198,000 minus 115,500, which is 82,500. But which one value of the vehicle in 82,500 ka 88,400? It means we made a profit, right? Does everybody agree? So rent profit of guy, yeah, 88,400. Rent profit, yeah, 5,900. So its income, it is going to be recorded as income. Does everybody understand? So you say cost minus accumulated depreciation, which is 82,500. So that was the value of the vehicle. That was its value, but we sold it for more than what its value is. So it means we made profit from this sale, right? Which will be recorded as income. And then Barre provide for depreciation as follows. On vehicles at 25% per annum on cost, and then for equipment, it is given. So for equipment, we don't calculate anything, but we calculate for vehicles. Let's start with the sold vehicle. The sold vehicle, it business for how many months? For 10 months, right? Because I had already shown by calculating from March to December. So it stayed for 10 months, and depreciation is on cost instead of diminishing balance method. I hope everybody knows the difference between cost and diminishing balance method. So the depreciation on the old vehicle is going to be 198,000, which is the cost, 198,000, and then multiplied by 25 over 100. Are you still with me, guys? Let me check on you. Let me check. Is everybody still awake? It's at night. Let me give me a thumbs up. Thank you. I'm waiting for the second thumbs up so I can continue. We have 7 minutes left. Great. You guys are not sleeping on me. So it's 198,000 multiplied by 25 and then multiplied by 10 months over 12 months, right? Because Hayadula businessing for the entire year, during the 10th month, we sold it, right? Which gives me an amount of how much? March, April, May, June, July, August, September, October, November, and December, which gives me 41,250, right? And then how is depreciation on the 41,250? Please note it down because I'm going up now. And then let's look at vehicles. So at the beginning of the year, we had vehicles value as, yeah, blue. We had the vehicles are 1,546,000. So 1,546,000. 198,000. So it means the vehicle is a cost ya 1,348,000, which is this amount, this one, minus this one, because it has been sold, so we minus it. And then I got an amount of 1,348,000, right? And then we multiply that by 25 over 100 to calculate depreciation, and it gives us 337,000. So the depreciation for old vehicles, old remaining vehicles, is 337,000, and then depreciation for the sold vehicle, it gave us an amount of how much, Ghana? That 40-something thousand that I calculated. I'm sorry I didn't note it down. I hope you guys did, but I'm also going to give you a memo. So depreciation for the year, Ibeba, those two amounts plus this amount for equipment, and then the total amount is 468,750, and that brings us to the end of today's class. We have 40 minutes, so everybody has to, like, it's compulsory, you get me, to have that conversation with me, to ask me at least one question before we wrap it up, so that we can prepare for tomorrow and have a productive week. I will see you guys next time, but a question is compulsory. Ladies first, so I'm gonna start with Babalo. Ask me at least one question. Anything you want to ask me from all these transactions we did that you think you have a question, because there's no way you don't have a question unless you are not in the spirit of learning. So yeah, thank you.
So I'm always having a problem on
debts and loans.
Yeah.
So yeah.
So tell me, after today, do you understand the difference between capitalized? Because we are going to have more classes now. You don't have to understand go one class. Get what I'm saying? We are going to do more question papers and we're going to make sure you are ready. Because one thing about income statement, it's going to take a lot of marks, you know, a lot. There's a possibility of it not coming up June and the rest of the year, but in March, it's going to take a lot of marks, and that's where you need to collect. I used to get 100% in the income statement, so my tutees have to get 100%, that's for sure. So tell me, do you understand now the difference between capitalized and not capitalized?
Yeah, I get it.
Do you get it now?
Yes.
So tell me again, between a loan that is capitalized and one that is not capitalized, which one would you take?
Not capitalized.
Not capitalized because interest is
It's
lower,
decreasing.
right?
Yes.
Yeah, it decreases with your payments. When you pay them, interest goes down, right? So, and then you talked about debt as well. So I'm guessing the provision for bad debts calculation and the bad debts calculation, right?
The provision for bad debts, they sometimes say, it's adjusted to maybe 25% of trade debts. Like that's where my problem lies.
Okay. All
Yes.
right. Okay. So you want us to explain it more in our next class, ne?
Yes.
Not a problem. What I'm going to do in every class is we are going to do a question paper. If we have to focus on transaction dates and failure, we will do that. But the only way you can understand really how they ask is if you we are doing question papers. So I'll make sure we have more of that. And then Mueketi, what's your question for tonight? Hi, Bo. Angifuni love, you'll give me that heart. Adi 40. Today I want questions only.
I get a question.
Are you sure? Okay, so when alone, okay, so what I'm gonna ask you to hurry. When it comes to that calculation area in Zenya rent, do you now remember how it's supposed to be done?
Hey, kahopol.
Okay, you remember. That's great. So what do you guys want to do on the next class so that we can wrap up and leave? Does anybody have anything specific that they would love to do?
Always a direction in it.
Do you guys have ratios now? Oh, kind of you are doing cash flow, right?
Hey.
Oh, I understand. Mara, we have to be on the same page. So I think we will do ratios later because regarding income statement, ratio, you guys are going to be confused. We need to do one topic and properly understand. Like before you for question paper, yeah, income statement and you get 100%, we can't move, you know. And then maybe after 2 classes, the income statement. Let's have 2 more classes discussing income statement, and then the third class, which you are probably going to have with Mulahadi or Karabo. Then you can do the statement of cash flow and ratios, but ratios are easy. I'm promising you.
Balance sheet is term 3. Term 1. Kabuza.
It was all 3. All 3. And usually, but I'm not promising anything, and I don't want to give out information that is not valid. But usually, the cash flow at term 1, it's not a lot of marks. You know why? But income statement, I get term 1, it's supposed to be grade 11 revision. Income statement and balance sheet, you've done them. Do you understand me? You know them you have done them. So they're going to ask them a lot at term 1. Cash flow is going to be there, but it's not going to be a lot like that. But when you go to term 2, 3, and 4, that's when they're going to ask it a lot. And they're not going to ask balance sheet and the income statement a lot because it's grade 11 work in a way, right? So we are going to do cash flows a lot. So the week or 2 before you guys, we're going to make sure you guys understand cash flow. Molahari is the best in explaining cash flows, the best. So don't worry about that. She'll properly explain and make notes, okay? Do we have any other queries, concerns?
No.
Are you also fine, Fabi?
Go back and next question. I'm gonna read the notes.
The notes to the balance sheet.
Yes.
Okay. We will make sure the next class we have is Boma 2 hours because we have so much to do. Hey, you guys still have to understand income statement. You guys still have to understand notes for balance sheet and cash flow. So you understand how much work is that. So yeah, you guys should try to have 2 hours classes, but talk to parents about that. And then, yeah, I'll also tell tutors, hey, there's a lot to do there by accounting. But yeah, thank you for raising that. I will bring it up and then I will make notes. Okay, I'm going to prepare notes and I'm going to find question papers.
Okay.
And then, do we have anything else? Okay. Okay, guys, I will see you during our next session. Good night and have a productive week ahead. Make sure the week is productive. Thank you for the heart. And I will see you guys during the next class. Bye-bye.
Bye.
Bye.